Good morning. Okay, so markets obviously came off the low strongly. They typically do that after a decline like this. This one, as you all know, was special, moving so far so fast in a short amount of time. Now, prices are the futures anyway. We'll see after the gap up what happens. Futures are moving up into the first resistance area over here that I've marked off. And of course, it is an area. It's already stalled here at the first one, and the next one is up here. So that's why I've marked off these different indices, contracts with their respective areas. So at this point, is this turning into, an M top, possibly rolling here? Obviously, we can see that the momentum is stalling, and it is overnight trading. So how much weight to give it? But, just looking at the charts, we see that, the move here, measured move here, and, it starts to stall, which is okay. There was your pullback, and then it just barely takes out the high before sellers come in again. So this is how we read momentum slowing down without the squiggly lines, oscillators over here. All you have to do is look at the distance between the lows. So this was a decent move, coming off of the low, and it pushed up again nicely, which suggested, hey, buy the pullback. Traders did, but then they sold soon as it took out the high. And this, for some trading methods, is a buy setup, meaning rather than buy the pullback here, they're buying after it takes out the high. And I don't know where they put the stop. Some could just do it on, an arbitrary loss of, say, I don't know, I'm just making up a number here, $200, whatever it is, whatever amount of contracts it's relative to that. And they just say, okay, I'm willing to lose X amount. Some are going to say, I'm going to put my stop under here. And now even coming down here for the moment, that's not a plus. It's actually a negative, because, when you start a move here and it ends here and you go all the way back down to the low, or say 80, 90% of it, that's an indication of weakness. It shouldn't come back there. What it should do, even if it stalls, is we get a red bar ignored, it goes sideways, and then it pushes higher again up toward the next level. So we already have a minor sign of weakness at this point. It's pre-market, so a little less weight on that, but let's see what it does. Let's clear this up. Good morning, Cliff. Good morning, YouTube. Good morning, everybody. So there's the sideways price action there. There's the 15. There's the 5. Had a bit of a, let's get rid of these lines here. Had a bit of a quick drop there. So as we go down to smaller time frames, we see more detail. And, you could see the move after the topping tail when it reached over here. I'm trying to get that area. You see they line up. It was right around here on the second bar. Well, there's the top, the drop. And now, we look at what we call bar by bar analysis, and we look at reactions to reference points. So here, when this came up to retest that area, slammed it back down again, and whoever's trading, they all hit the bid, knock it back down, and now, it's just choppy price action. And again, it's pre-market. We'll see where it all goes. All right. Looking at the NQs, and just eyeballing this, give or take, it's about a 50% retracement from the high, measuring the high to low to, where I've marked, it's about 50%. And that typically lines up with price resistance. So, we have this area here. The Qs, same story, move, nice move, takes out the high. Right away, sellers start to come in. So we can say traders are beginning to anticipate, selling this area up here. And those of you in the advisory letter, the ETF letter, which I showed you happened in 1998, was pretty much this scenario. The few times that prices dropped where, you had the turn and it had a monster rally and, you know, went up one more day. It actually stalled. And if we just went and looked at those charts, what you'd see is a choppy day. And then it dropped again down below the low. And that is typically where you get the real big move. So again, you can go and reference that letter, but after it broke down, then it made a 75% run. And the second time it made about an 85% run back up to the high. So that was the great opportunity for swing trades. This one, right? And even the other one will be good for put spreads, but this one with the high volatility, this monster drop here, set up a good opportunity for put spreads as well. The next one, if it sets up the same way it did in the past, will be great swing trades, directional trades, and so on. Well, I only can expect what happens based on the past, Paul. Things can happen that are different this time, as I say, but we have the past as a guideline. And now as it's coming up into this resistance, we will look for confirming price patterns based on that possibility. So we have this expectation that the past can again repeat now. So we get a breakout failure, some kind of bearish pattern over here, we sell it short, right? You could sell, tomorrow. I know you might do it today. 0 days to expiration call spreads, bearish call spread pattern on the SPX. There could be intraday shorting opportunities, of course, on futures and ETFs. Now, on the other hand, I mean, we always have to be open-minded, right? With looking at, hey, this isn't playing out this way. And if we see this doing this, well, that kind of leads us to think that, hey, maybe this thing can actually get up to the 50 or so, or give or take before it rolls over. So right now we're beginning to get some selling coming in anticipation of this resistance area, this supply beginning to overwhelm and maybe getting that retest. So again, you have the letter, you can see the patterns. It was a similar situation. It came up. The next day was a stall day, and then down it went. So, I mean, if we get that, right, it's the same way I'm telling you about slowing momentum here, right? The distance between the highs. Well, if we get a reversal here and this goes down and now we get a reversal, you're going to have the same situation of slowing momentum on the downside. And then you're going to have every indicator junkie in the world after it goes up telling you, oh, look at my proprietary magic indicator showing the bearish divergence, right? Or their fib extension or some other BS, right? All you have to do is follow patterns from the past, the history, because they repeat themselves over and over and over again. Right? Don't we wish we knew that exactly how this one would play out exactly, but we don't. So we just look at what is. And as I said, if this keeps marching higher, well, then it'll reach some other level. But historically, patterns that drop 15% from a new high don't go back up to the old high. Patterns that are declining over a period of time and then like the end of 2018 into 2019, they can make V bottoms and go up because they've already been dropping. This typically does not go back up to the high, right? It could stall here. It could make a higher low. So let's back this up a little bit and clear the mess. If this should actually rally deeply into here, then the probability of a higher low becomes a greater possibility, right? So just like I explained yesterday on a 5-minute chart of what was happening in the spiders, and I said, based on this pattern, it should do this and it should do this and that, and right, it played out. in that way. But it doesn't always happen that way. Sometimes, like this, like I'm saying, this doesn't go down here. But if it comes up here, every pattern that we see in the moment guides us to the possibility of what should come after it. The same thing, as we look here, right? It's in an uptrend, multiple time frames in an uptrend. Well, you buy pullbacks. Consolidation at resistance is what's supposed to happen, right? This big ugly red bar that turned into a bottoming tail makes sense in a strong uptrend like that. So we have trends, we have patterns, we have support and resistance, and depending on how things come together, it guides us as to what should happen in the future. All right, let's move on so I can let Dan go over all the nice trades. All right, YM has been the weakest. The Dow's been the weakest. It crashed all the way down and just stopped at, the last place on the chart before going over the cliff into what could have been a real crash. But the Dow coming up, it's the same story over here, right? It's about halfway, 27. Where's the 200? Just above, just above in here, so that makes a whole lot of sense. About a 50% retracement. You can see these overlapping opens and closes here. This cluster of these bars overlapping each other, which is this consolidation here. And so a move up into here, right? So this, which leads me to thinking, well, yeah, this could roll over here and drop, but I think a better pattern would be, okay, it's stalled here. Everybody's a little apprehensive that's looking at intraday pre-market charts, and it pops higher and then fails. So that kind of a shock to the pattern versus just the slowing momentum, I think would be fantastic for a shorting opportunity. We'll see how it unfolds. Russell, obviously was weak before. It's weak now. This could be the one that brings up the rear, has the better potential for longs if we do get, the market with a long bias early on, where it could pop up, where the other markets move into their respective resistance areas. This isn't even at resistance yet. So maybe it could play a little catch up. We'll see. Oil's up here a bit, but that came back down. Look to the left. Why is it bouncing? Just look to the left. Right, and there we go, reversing, and it'll come up into resistance here, and that's helpful for the market. But same story. Momentum is stalling here. Bonds, they're down. That's helpful to the market, but big deal, right? It had a momentum move. There is no slowing in momentum here. So you've got a topping tail, right? You got a topping tail in a strong uptrend, which theoretically, right, we say we look at trends, we look at trend strength, we look at support and resistance. This is closer to a resistance area, which you could see by looking to the left. And theoretically, this should lead to a consolidation or some choppy price action. I mean, super bullish, it continues up. But in other words, that topping tail should be ignored for the most part, not result in a move back down to the 20 MA, a deep retracement. So we'll see. If bonds continue to push up, that's going to put pressure on equities, because that means that interest rates, where they stabilized yesterday, are continuing to move down. Right? Internals, we'll take a peek quickly. Gold up here a bit, right, down at support, came down really hard. So that's kind of questionable. Whereas I could say, though, that topping tail should have resulted in some consolidation. Well, the markets, came down as they did, and there was no place to hide, and gold came in. So this will have to repair the damage. Silver, right, got shellacked big time. Giving back that whole thing, and it was showing relative weakness relative to gold, and so longs just got out of the way when the things collapsed. Internals are still, no, that's intraday internals, tick indicator. They've flipped up. Now, typically what happens, and this was a surprise yesterday. I wasn't looking at the put call ratio at the end of the day, So it's actually quite a positive if this number is real, that the wrong way option traders were loading up on puts on the way up, because they rarely get it right. Yeah. Okay. So that's a positive short term, that they're betting that this market's going to come back down right away. So we'll see. Now, this was deeply into an extreme and a bullish territory, coming as low. And historically, once it gets down around 300, the market pops up. I mean, every time I've seen it, that's what happens. So it doesn't have to get all the way back up to 100. It won't get all the way back up to 100. I mean, yeah, the plus 100. It might get to minus 100 before this rolls over. It kind of depends on what happens today. And sentiment is still very bearish. So again, we're not going to get, I believe, we're not going to get a secondary waterfall decline in a measured move like this, where, the markets go down another 15% all of a sudden. This doesn't support that. But to have it reverse up into this area where there's this gap down, about a 50% retracement, the resistance to the left that we looked at, makes a whole lot of sense to come, for selling to increase again. And, if we get that retest reversal, that's where you're going to get the highest, odds move of a nice swing trade that's going to make a much bigger move than this. Sure, this looks a hell of an impressive move for one day, but relative to where it came down, you hear them touting on CNBC, what an amazing day it was. And, the politicians that want to say, oh, everything's okay. I mean, that's, self-serving, of course, but as far as, the move up compared to the move down, historically, it's normal. And then you get the next selling bout to come in. So there you go. Transports, we always look at crushed. They went down, came back up. Plenty of room to go up here, but maybe they play a little catch up as well. But what's showing relative weakness, once in a market like this, once the market does roll over, right, this isn't going to begin to outperform in a weak market. So you got to look at what is, look at the historical norms, and then just see what exactly happens and see how it all fits in. Right. So that being said, it's all yours, Dan.
All right. Thanks. Yeah, pre-market here. We got ascending triangles. We still look higher. And that was my bet yesterday, that we'd get one more up day to go through closer to that resistance area. And when we had this little pre-market sell-off, I said yesterday, as long as we gap up over 305, 306, and that's exactly what was happening on the little sell-off there on the G7 comment. But now we're back at the highs and we look great. So as of right now, 9:19 Eastern, I have a total bullish bias for another day. Now, some people were telling me, oh, my PM told me that's the low and I should start buying now. And I don't know if that's the low. I mean, you just heard Greg's opinion. But if that were your bias, why were you not nibbling Friday? And yesterday we were posting so many bullish trades all day long, it was making your head spin. And now, third day up, gapping up, the odds are significantly less than they were the last 2 days. So I think I'm going to be again just in a day trade mode, long or short, and selectively on the put spreads. I mean, we got like 20 opens. Lou, your drop down, please. Lou was asking me what's an ascending triangle. Actually, it's not a perfect one, but an ascending triangle just means, the lows are higher and the resistance is there. So maybe it's just a bullish rectangle consolidation if you're looking at the move from here to here. So yeah, don't worry about it being a textbook one, but it's bullish. That's a very, very bullish 15-minute chart right now. All right, our opens, we have so many bullish opens. We have put spreads all over the place. Qs, spiders, Apple, Google, RCL, Microsoft, Engine, Amazon, Goldman, XOP, OIH I didn't get filled on. I just posted, I like UAL. I was looking at these last night, Climactic, and they have good juice. UAL, AAL's nastier monthly, so that one's not my favorite, but remember we talked yesterday, I like the ones that are on monthly support. So I like, for the airlines, I like Love and UAL put spreads. RCL I posted last night as a directional long. That's a bull 1, 2, 3 after climactic. And I'm going to be looking to add put spreads, or naked puts rather, for next week. McGraw, that has to go down with one of our most amazing credits for distance, out of the money for 7 DTE. I mean, folks, I mentioned it in the video, but look at this. Climactic buy setup. We sold the $50 puts for 86 cents a share for 1 week of expiration. And this has just been an amazing environment for put spreads the last 2 trading days. Now with the broader market weakness, we have a call spread on VXX. That looks fantastic, and we're long puts. And we added a TLT call spread. So those are kind of, inverse fear things. So when the market stabilizes, so we traded those absolutely textbook. I see our Apple, Amazon at the high. Google, actually, we took profits. Spiders, we took profits on the one that expires tomorrow, but we still have one for Friday and for June. Tesla at the high, that was showing relative strength yesterday. All right, enough of all that. I've given you a mixture of opens and new trade ideas. Let's go to gappers right now in the next 7 minutes. QGen, that's a big old gap, kind of looks like a buyout. VIR, gapping down. This looks like a day trade short. That's a bearish gap down, bearish consolidation with a price void. This could easily fall $3 to $5. Keep an eye on that 10-minute low for day traders. Microchip. We're also in the SMHs. So SMHs are up. So that's enough. I don't need to go start hunting for more bios, even though NVIDIA was good. $27, gap down. Wi-Fi, gap up, 1424. Big gap, but no price void, but we'll keep an eye on it because it has room on the monthly. Monthly could go to 18-ish. Yeah, a bunch of these are earnings over here. Yeah, I look at earnings and gappers. $55, McGraw, quick draw McGraw, put spread candidate. Under, what's today, Tuesday, under Friday's low. Look at poor Tilray dog, gapping to all-time lows. I have it on my other computer, so I'm going to delete it. LibGo, $28. Gapping resistance, but McGraw, look, 1, 2, 3. 3 areas of support. That's a put spread candidate. I can't tell where you're gapping, and you're in a downtrend. Stone, very, very sloppy, but put spread candidate. G-Sky. I got too much to look at, so I'm in pruning mode. You're gone. Faux 1070. I got better stuff to look at. IPAR. Nice 1, 2, 3 here after climactic. Now see, that's similar to my RCL, but I like RCL better because it's more extended, the rubber band. Rubber band is a lot extendeder. Is that a word? Extendeder. This one's extendeder. Look, 17 down to 13. A little bit of light volume, but you're swimming upstream on the weekly and monthly. I still like my RCL and the UAL better. Swimming upstream, you're gone. AutoZone getting whacked. 986. Wow, that's a damaged monthly now. I'm not going to do anything with that. Let it settle down. You're a mess. SCM, I'm going fast just because of the time. I'm gapping resistance. If I were long, I'd be selling right now. IGT, 1135. The gap's a little too big, but it's a Climo swimming upstream. I still like my airlines and cruises better. This was a nice breakdown failure, wide range igniting, price void. We'll keep an eye on it. If that gives us a 1, 2, 3, it could go to 80, 85 cents. KSS had earnings, 40 bucks. Put spread idea, maybe 30-minute high. Nice breakout on alarm yesterday into earnings. It's holding well, 50 bucks. McGraw put spread idea. It had earnings, therefore we should get higher volatility on selling puts. Target 112.50. Gap's too big. Had quite the relative, well, everything had relative strength yesterday on the bounce. It's gapping too much for me. SE 50 and change. No setup. There's our cruise line over the high. We're already short puts in that RCL. I like a lot. TLT flat. Well, up in nickel it's flat. But our call spreads are going to. We're going to get volatility contraction and time decay overnight. So both our VXX and TLT are going to be we're going to have more gains than we went home with. That's my point. All right, there's love and UAL. There's RCL trade. TW had a nice day on a buy setup, and we were talking yesterday about pullbacks where the weekly and monthly are not damaged, and that's a great example of that. So here's another one, Triple C. Alex mentioned it yesterday. That looks good. But all right, we're breaking out now. So I told you I got a bullish bias for today, but it's not the ideal place for new swings. The last 2 days were. All right, here's a Climo. It looks like maybe a day trade long. Daku, another one where the weekly monthly is not damaged. I was going to sell a put spread on this yesterday, but they're way too spready. But it still looks higher. Greg's Coffee Shop over the high. Sedger, recent IPO, still slopping around. We have a put spread on Microsoft. We have a put spread on Apple. Google, I mentioned, we took our money. Well, you know what, Apple, we took our money in the weekly trader, and I forgot that we have it in the swing trader. So the swing trader is actually going to get a better out. And I personally only covered half of mine, so I was straddling the 2 letters, so to speak. So Apple, we're getting a very nice gap up. All right, whew, I got to everything right to the bell. Very nice. Alex, in a nutshell, yeah, that's what Greg was saying, and I said that yesterday. I was expecting one more update. And Greg thinks we're going to make a new low, or at least I don't want to put words in his mouth. Maybe he just said he would love it. I don't know if Greg thinks it. Just because I don't want to put words.
What, Dan? I was answering a question.
Do you think the market's going to make a new low, or are you just hoping?
I'm hoping it does.
No, but do you think it will? That's Alex's question.
I think whatever it tells me it's going to do once it starts doing it. So,
right.
Yeah.
So that's what I didn't want to paraphrase. Yes, I would love it too, but what's my opinion on whether it's going to do it, I have no idea. None. That's me.
I do think it will make a new low because historically that's what it does. Like I said, if it retraced, say, 75% of this decline, then I would say no. But if it stalls and begins to reverse lower today, then I'm going to tell you yes.
Just looking at opens. Our D-Dog. D-Dog hasn't triggered. So yeah, Apple, we still have